Hello everyone, welcome back to the channel. I hope you guys are fine and doing well. In today's video, I'm going to cover a case study from the Harvard Business School on the past, current state and future of oil. I have broken it down into two episodes. In this episode, I will talk about the historic and current state of oil and the industry structure. In the next episode, I will talk about COVID, shale oil, the future of oil and some recent developments. This comprehensive look at one of the most critical commodities in the world reveals some interesting surprises and critical learnings. So let's get started. First, let's take a brief look at the historical context and the current role of oil. Oil, first discovered in Pennsylvania, USA back in 1859, became the dominant source of energy by the mid 20th century. Even today, despite seismic shifts in global energy consumption, oil still accounts for approximately 33% of the global primary energy consumption. This dominance has evolved over time and has been driven by technological advances and geopolitical factors. As you can see in figure 1, oil's share of the global energy mix has declined in percentage terms from 40 to 33% since the mid 1990s, but in absolute terms, consumption continues to rise, reaching approximately 200 exajoules or 100 million barrels per day before the COVID 19 pandemic. Oil production is concentrated in a few key regions, with the Middle East, particularly Saudi Arabia, being a dominant player. However, the emergence of shale oil has made the United States the largest oil producer by the late 2010s, as illustrated in Figure 2. Figure 4 shows the dramatic fluctuations in historic oil prices. Let's take a closer look at some key events that influenced these changes. In 1973 and 1979, we see significant spikes due to the oil crisis when Middle Eastern producers strategically reduced production. Fast forward to the 2000s, the rise of China and other emerging economies drove up demand, pushing prices higher. Then, in 2008, the global financial crisis caused a sharp drop in oil prices. Most recently, in April 2020, oil prices turned negative for the first time ever due to the COVID 19 pandemic. This illustration is a stark reminder of how unpredictable and volatile the oil market can be. Now let's talk about the industry structure. Oil activities can be broken down into three segments, namely upstream, midstream, and downstream. Upstream is all about exploration, development, and production of oil from onshore and offshore facilities. Midstream is all about accumulation of oil, transportation to refineries, the refining process itself, and distribution to the point of sale. Uh, Downstream encompasses marketing and selling of oil through retail outlets. Since a typical oil field also contains associated gases like natural gas, companies that engage in upstream activities are active in both oil and gas. Some companies specialize in upstream activities while other companies are vertically integrated and cover the entire value chain. Oil companies can be broken down into two segments, namely independent oil companies or IOCs and state owned national oil companies or NOCs. Some of the major independent oil companies include Shell, BP, ExxonMobil, Chevron, and Total. And some of the major national oil companies include Saudi Aramco, China Petroleum and Chemicals Corporation, PetroChina, Rosneft, and National Iranian Oil Company. Some of the NOCs work in collaboration with IOCs where the oil field is owned by the NOC, but it grants a concession to one or more IOCs to produce and market the oil from those concessions. This model was prevalent in the early days of the oil industry when NOCs did not have the expertise to develop resources and transport them to the market. Over the years, more and more NOCs have developed their own expertise and they now cover a larger share of the value chain. The line between NOCs and IOCs has begun to get blurry as NOCs have started selling their shares to other parties. Saudi Aramco listed a relatively small portion of its shares on the Saudi Stock Exchange in 2020. Rosneft, the largest Russian oil company, has shareholders other than the Russian state. Now let's look at total revenues of top 10 oil and gas companies in 2019. Sinopec Group is right at the top with a revenue of 407 billion USD. China National Petroleum Company CNPC is at number 2 with a revenue of 397 billion USD. Saudi Aramco is at number 3 with a revenue of 356 billion USD. Lukoil is right at the bottom with a revenue of 102 billion USD. The differential between Sinopec Group and Lukoil is roughly 4 times. Now let's look at market capitalization of top 10 oil and gas companies in 2019. Saudi Aramco is right at the top with a market cap of 1700 billion or 1.7 trillion US dollars. This makes it the most highly valued company in the world owing to its vast resources that could be developed and produced at a fairly low cost. ExxonMobil is at number 2 with a market cap of 290 billion USD. Royal Dutch Shell is at number 3 with a market cap of 264 billion USD. ENI is right at the bottom with a market cap of 55 billion USD. The differential between ENI and Saudi Aramco is roughly 30 times. Proved oil reserves have actually increased over the past 2 decades by approximately 36% from 1,277 billion barrels in 1999 to 1,734 billion barrels in 2019. This increase, despite growing demand, indicates that technological advances and new discoveries continue to add to the global oil supply. For instance, Venezuela, Saudi Arabia, and Canada are among the top holders of proven reserves, with Venezuela leading at approximately 304 billion barrels, followed by Saudi Arabia with 298 billion barrels and Canada by 170 billion barrels. By region, close to half of the proven reserves are located in the Middle East, and if these reserves are developed at the current pace, they would be sufficient to meet current levels of demand of on average 100 million barrels per day for the next 47 years. Thank you very much for watching the video. I hope you liked it. If you derived any value from the content, please like, share and subscribe the channel and stay tuned for the next video.